So when casual observers or, casual investors, non-investors sort of, come up to me, they always say, Charlie, man, and then, by the way, everyone's doing it these days. What's going on with the economy? Why are things getting worse? I'm always kind of hesitant to answer. Essentially, a lot of money was printed, right? I mean, let's face it, it was distributed by the federal government, the Federal Reserve, trillions of dollars, so much money. A lot of people didn't have to work. A lot of people went on shopping sprees. And of course, the result is this wage spiral that's now out of control. It's crushing small businesses. Inflation, also, that's taken on a life of its own. And of course, there's the pandemic imbalance and impact on supply and demand. And that was made even worse by China's ham-fisted approach when it comes to COVID-19, these random shutdowns that can come at any time. But I think the part that's most frustrating, however, is the powers that be seem to have ignored Main Street, right? Every time Main Street complained about prices starting to go up, starting to bubble up, they were sort of dissed or kicked to the side, sort of the old W.C. Fields, get away from me, kid, you bother me. I mean, President Biden still insists to this moment the economy is fantastic. Jay Powell, he did reluctantly give up on the notion, even though the panic was saying it was all sticky and real at the time, he finally gave up on transitory. So now the Fed must deliberately harm American prosperity, right? They've got to curb our inflation expectations. They've got to do a reverse wealth effect. I mean, it's behavior modification, and it's crushing stock portfolios. It's going to lower home values. It's going to put off home ownership altogether. And I got to tell you and admit, it seems kind of harsh punishment for people that only did what the powers that be wanted us to do. They wanted us to go out and spend all that free and cheap money in the first place. Joining me now is the president of Bianco Research, Jim Bianco. And Jim, so the Fed's out this morning saying they're committed to restoring price stability unconditionally. Sounds a little ominous, but I think the street wants to see that sort of backbone, if you want to call it that. But how does it play out?
Well, yeah, I think that they do want to see that kind of backbone. If you've got an inflation problem, then let's deal with it. Let's get it over with. Let's fix it. Let's not be wishy-washy and drag this thing out. We did that last year with the word transitory, and now it's, harsher medicine sooner seems to be better than slower, methodical medicine later. So how's it going to play out? The Fed's going to stay very, very aggressive. There's only going to be one inflation report between now and the July 27th FOMC meeting. That's the next Fed meeting. And that number's probably going to look a lot like the May number. And it's going to leave the Fed with very little choice but to raise rates probably 75 basis points again. And so we're going to continue to see that harsh medicine keep coming.
In the meantime, speaking of economic reports, we've had some really gnarly news. It looks like almost all the data suggesting the economy has turned on a dime. Some of this stuff, the swiftness of the reversals, is there a chance that we could already be in a recession?
I almost think that at this point, that is almost a de facto position that you'd have to argue otherwise. The 6% decline in the stock market this week, coupled with the more than 20% decline that we've seen year to date. By the way, Charles, there's never been an instance when the stock market has fallen 20% that it's predicted a recession, because it's already in a recession when that happens. 8 of 11 times.
Right.
The other 3 times we never had a recession. The last one was 1987 stock market crash. 60% of CEOs, as surveyed by the Conference Board, think we're going to have a recession. And I heard you in the previous segment, the University of Michigan consumer confidence number at a 70-year low. You add all that up, it would actually be a minor miracle if we avoided a recession. So if we're going to have one, let's get it on and let's get it over.
Right.
Let's not drag this out any longer than we need to.
By the way, I'm in that camp too. It sounds harsh, but wherever we've got to go in the downside, I'd rather get there now than dragging it out. And I know it's painful, but we get to where we need to be for opportunity. And we're always looking for that, right? Yesterday was interesting because that 30-year bond yield made what Jeff Gundlach calls a throwover, right? Where we took out intraday at a 2018 high. Then as soon as that happened, it reversed sharply lower. Meanwhile, the CRB looks like that's breaking down under some key support. On the inflation side, if it's peaking, what would it mean? Could the stock market start to sniff that out?
Yeah, I mean, it could very well be peaking right now, but we also have to remember, like, say, oil's down 10% this week, but it had 7 straight weeks of up gains, huge gains coming into this week. So that is, whether it's technical or it's a peak, seems to be remains to be seen. But if it is a peak, I think that's not enough for the stock market to really take comfort. What it really needs to see is solid evidence that not only is inflation peaked, but it's coming down. Just kind of stop going up, I don't think is going to be enough at this point.
Hey, I got less than a minute to go, but I got to mention this. I saw a video And you were saying that this is time for big change in the economy, the banking system, payments system. In less than 30 seconds, can you elaborate?
Yeah, I think that there's going to be big changes because of the inflation, because of the end of COVID in the economy. And what people are going to become accustomed to is changing things. And one of the things that might need to change is the banking system. In a digital world, we need a different type of payment system. I need to be able to pay Amazon or Netflix, take Netflix, by the second so that I don't need to have a monthly subscription. We don't have a payment system ready for that.
Right.
Crypto and some others are trying to bring that to us, and we may see that come in the near future.
Well, I hope it comes to vending machines, because up on the 20th floor, they've retrofitted one of those old coin machines. And every time I give them my credit card, they won't let me know if they're out of this seltzer water or not. So they must owe me right now about $24, Jim. I don't know how I get my money back, but I'm with you. Let's update all of this stuff to the digital world. Happy Father's Day. Have a great weekend, my friend.
Yeah, happy Father's Day to you, too.
All righty, coming up.